Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings to everybody, guys. In today's video and second report in this week, we take a look at the Great British Pound. Well, I just thought that fundamental background for the gold market mostly stands the same. News that stands in relation to euro currency and to the gold mostly the same, and you could read them now yesterday's weekly report dedicated to euro. And I think that, well, daily video updates should be enough to keep up with the gold analysis. Everything stands there very well. So as you know, on Friday the gold has hit our 1750 target, and on Tuesday we discuss what to do next. But at the same time on the forum, I've got a lot of questions on the situation on the cable, and some people asking on if we expect the euro will drop, so should we talk on the break-in relation between the euro and gross and cable, because on the cable we have in the short term some bullish context, or at least we expect and watching for possible bullish progress here. And today we have tried to answer these questions, especially from the fundamental point of view. It means, as a result, well, currently we should change the question. So the question now is whether stands not in relation to breaking of the correlation between the euro and Great British Pound, but whether it could happen that the cable will start to drop faster than euro. That is the question, the correct question. As you will see, on the fundamental background, in the United Kingdom there are lots of problems. In general, the government makes good measures on the supporting of the economy. Well, in general, they are not bad. But they have different problems. First of all, the negotiations coming hard with the European Union on the Brexit. And yes, we have half a year till the end of 2020, but currently it's June on the horizon, and half a year is behind, and nothing really has been achieved. And we should understand that as European Union, as United Kingdom stands in a stunned situation, so it's shocked by the epidemic, and they really have the headache on its own problems, and come to agreement in the bad times is much difficult compared to the good times. And even in the good times, the negotiations was really very hard. So that's major driving factor for the cable right now that's pressing on the market. Actually, recent drop that we got on Friday was due particularly this moment. Second driving factor, by our opinion, is the policy of the Bank of England. Despite that they talk on that hardly they will adopt the negative rates, the short-term yield shows the zero yield and turning to the negative territory, and yield usually correctly shows the short-term price anticipation and rates anticipation, and that makes us think that in June some more dovish policy could be announced by the Bank of England. So this is 2 points that we should keep an eye on. On the background of this situation, perspective of the cable looks blurred. In a positive scenario, probably cable could spend some time in the range, because in fact from technical point of view, right till the 114 bottom, it's relatively free spaces. So yes, we have daily levels, daily patterns, but from the monthly point of view, that's an area where a market could fluctuate freely without breaking the major tendency. So the one question that we have in the shorter term is what will happen with our stop that based on this huge engulfing pattern on the weekly chart. So remember, the weekly chart is this huge bullish engulfing. And by the logic, this engulfing should lead to, as it works proper, it leads to some A, B, C, bottom, D pattern. So by this pattern, market theoretically should return right back up to the 130. That's the minimum target of this pattern. Also, this is as you know, this is a monthly bullish grabber. And currently, the major question is from the fundamental point of view, whether these reactions, upside bounce, the rejection of price, and some psychological sentiment reaction on emotional reaction on the drop. So this was overestimated drop due to the pandemic spreading and the first reaction on an epidemic, and that's then reestablishing to the normal common sense price levels. Or this is reasonable rebound. Market indeed is forming some kind of the upward continuation. So something should change here. As you know, the bets of this value, I mean either action to the 132 or action below the 114, it's not occasional technical situations. They definitely will get some background on the fundamental events. Something will change. Either something will change with the European Union negotiations, maybe if they will come to agreement, as cable could jump, or maybe something will change in the policy or central bank. Maybe some statistics will be released that is better than expected. Some fast recovery economy will show. So definitely something should be behind this possible strong action. Conversely, this should be no agreement. So be easing from the Bank of England. In this case, we will see downward continuation. And from that standpoint, market stance actually gets very close to the moment of truth. Because as you can see on Friday, what we have this ABCD in progress. We said, well, probably it would be better to keep an eye on the deeper retracements because as you can see, we have some targets on intraday charts that we have discussed, and they pointed first in this area. But on Friday, we've got some acceleration breaking through the 30% support. It means that our potential next target stands somewhere around 119, 120 area. That will be the point where the clarity should come. If market will hold above this area, it keeps chance on some larger A, B, C, bottom, D pattern. Somewhere in an area of 29, 130, somewhere in this area. If it will start dropping below it, and fundamental picture right now suggests that this is more probable, it will continue downward action back to the lows, or even lower in the longer term perspective, because here we have the oversold. It's also monthly oversold here, guys, in 117. That means that market hardly will drop below the 117 very fast. But the breaking of this level will be really big hurt for any bullish context that we have. And where it stands very close to it. So probably next week we'll get the clarity. Now, what our trading plan? What we will intend to do? Actually, the same what we have talked about on Friday. So first we are watching for targets. I suggest that we should ignore as this butterfly target as the OP by two reasons. First of all, we have the clear acceleration right down to these targets. Second, we do not have any reversal patterns on the hourly chart. So if we'll take a look on the hourly chart, you will not find any bullish reversal patterns here. It's nothing actually to hook for. It means that more probable is market will proceed lower to the 1618 target of the butterfly is 120 even, or that's more acceptable to us. It's right down to the XOP, because XOP at least 1858 it creates an agreement with the daily major support. XOP stands 1860, level stands 1880, so that will be agreement support on the daily chart. That's our primary level to reach. XOP is good level, but it is sole level. It doesn't make an agreement with any available support. It just stands in the middle between the major supports. Yes, it agrees with the 50%, but 50% is not taken into consideration by the DiNapoli style of the analysis. So that's why I suggest that this will be major level to keep an eye on. And as we said on Friday, we will, once market will hit next support area, this level as well, and then we will check this on the area level. Our next step is to check for the bullish reversal patterns on the hourly chart. So every level has to be confirmed by the real bullish reversal patterns. Only in this case we intend to take the long position. Now, as you can see, it's approximately this next channel support where market was standing previously will come somewhere, well, below the 119 area probably. It's following the same pace of action. So that's approximately what we intend to do on the next week. For 2 moments. First, we are watching for reaching support levels. Second, we're watching for a bullish reversal pattern. If we will get nothing, we just do not take any long positions. And that will tell us that the bullish context here is not reliable anymore, and probably fundamentals will press cable lower. That's our view. Also, we suggest that you will read the fundamental background on the cable because it's really important and interesting. We're trying to show you the major driving factors that right now stands for the cable.